It all sounds so nice and easy. Just follow a simple trading strategy. The 5 and the 10 moving average cross over, and we're going to sell. And we're going to use a 1 to 3 risk reward ratio, and it works perfect. The 61.8 Fibonacci pulls back during whatever people call a trend, and we're going to buy right there with the stop just below the 78.6 and a target at the 1 point something extension for a 1 to 4 risk reward ratio, and you just let the stats play out. There's no problem, bro. You're just following the strategy, and the strategy works, right? What if I told you that everything you've heard about hearing a strategy is wrong? And then I hold out the red pill and the blue pill, and I say, hey, if you want to keep on going and trying to pursue that, you can keep living in the matrix, which I don't think is real, but just for the sake of this video, it sounds kind of cool. Or I could hand you the red pill and say, hey, listen, there's a different way you can approach this. A way that 10% or less of people actually use to get profitable. Here's the whole takeaway from this video. This video is me saying that in my 8 years of trading, and 6 of those years being profitable, I have not seen a single person use a black and white, super rigid, absolute mechanical trading system and it worked for them for a long period of time. Never once have I seen that. Normally when I ask profitable traders, and I'm talking people who have been profitable for like a year or more consistently for almost every single month and have generated a net profit and can prove it during that time, they usually have an approach that is very subjective. It requires their intuition, it's their skill set, and it is not duplicatable. There are only basic guidelines, basic tenets, basic pillars that they hold as values. Things like, let me buy at support and sell at resistance in general. Let me hold my trades a little bit longer if they're a winning trade, and let me add to them in general. And if the trade starts losing, let me just try to get out of the trade early so I could take a little bit less of a loss in general. And there's just these very generalized rules of thumb, sort of guidelines that they kind of follow. And then they have the rest of their trading approaches just all discretion. They're like, okay, I think I'm going to add right here. And then you may get frustrated being a person sitting here on the other side of this YouTube video, hearing this from me, somebody who's been trading 8 years, and you think to yourself, well, that's easy for you to say. You've been doing this for a long time. You have an unfair advantage. But instead, here's what you personally want. You want something simple. You want something that you can follow, something that gives you hope, that it's very, very easy to do. I'm sorry to be the person here in a YouTube video that has to keep it real with you, but that is not trading. Trading is like any other skill set in life. You learn it best through experience. And if you fail to take the time to get the experience, then you are essentially guaranteeing your failure as a trader. You will be one of the 90% of people that are frustrated that you can't just buy the 61.8 Fibonacci with a 1 to 4 risk reward ratio and it works out every time. It'll work out sometimes, and it might even have periods of sustained profitability, but in the long run, you will either be a break-even or losing trader like 90% of people. The very few people who make money trading consistently, that small percentage, that little sliver of people, they have very nuanced trading approaches, and it works just specifically for them. The good news is that you can actually learn this for yourself. You can learn it through watching the experience of others. You can learn it by taking a few things, bits and pieces, experimenting, and then finding an approach that works best for you. And here's exactly how you do it. Also, if you literally want to see me do this live every single day, I've been running a free Telegram channel for like 5.5 years. If you click the first link in this description, it takes you to my website. Click this option right here, my free Telegram channel. If you click that, it takes you to Telegram. You can see there's 57,000 people here in my Telegram channel. Just click view in Telegram and you're in. It's that simple. I've been running this Telegram channel for since 2018. So it's been 5.5, almost 6 years now. And I literally post all my trades, analysis, insights, everything in there. And I have been doing it for years. So there you go. That'll help you maybe learn through experience by just seeing stuff over and over. Now here's a way you can approach trading. Instead of defining black and white mechanical rules for if price does X, then I will do Y. Instead of doing that, take that, turn to your garbage can, and drop it in the garbage can. This is going to sound ridiculous for most people, but keep in mind, common sense is not common practice, and most people lose money. You don't want to hear it from most people because most people here on YouTube probably can't trade and they're probably spouting a bunch of nonsense with unsubstantiated evidence, and they probably don't live trade and they probably can't prove it to you in real time every day for years that what they're suggesting you do is actually working. You can see what I'm doing is actually working for me by following my free Telegram channel for an entire year. Watch me trade live. I post literally everything in there. There is no way to fake that unless I'm outright copying someone else's trades. So take it from me, one of the few people who actually knows what the hell they're doing, that this is the way to go about it. Do not use a trading strategy. Instead, just hold specific values. The first two things that I've been saying for a very long time is that I think you should keep things simple and control risk. What does this mean? Whenever you go to try to find a trading opportunity, accept that price is going to go up and down 50% of the time respectively. If you buy at random places on the chart and sell at random places on the chart with an equidistant stop loss and profit target, let's say 20 pip stop loss, 20 pip profit target, minus swaps and fees and commissions, you're going to be roughly about 50-50. Half of those trades will hit the take profit, the other half of them will hit the stop loss. If you don't believe this, go do this 100 times on TradingView in the replay mode, or just go to the chart and just use the long short position size tools. I'm not making this up. You can actually go and verify this for yourself. If you enter randomly, buy and sell with 1-to-1 risk reward ratios and an equidistant stop loss, like use 20 pip stop, 20 pip target, or a 50 pip stop, 50 pip target, whatever it is. If you do the same thing over and over, that is going to yield you about a 50% win rate. And you're going to be roughly a break-even trader. Guess what? 90% of people cannot even break even. This means you can start off a trading approach in which you are already a break-even trader and you're doing better than 90% of people. And this is literally, again, I say, by buying and selling randomly on the chart with zero technical analysis, zero fundamental analysis. You don't even have to know how to trade. You're literally entering randomly, but you are doing two things that are very important. Number one is you're keeping things simple. How much simpler does it get, right? Entering random buy and sell positions. And you're also controlling risk. How are you doing that? You're setting a stop loss. You're defining the amount of risk before you enter the damn trade. You're doing those two things. Now, there's a couple other core tenets as well that I think are really good to kind of exercise. When you have a trade that starts to win and you think the market could have a big move to a final desired profit target, say it's in an uptrend on the higher time frames, like the 1 hour, the 4 hour, the daily. It's at a big pullback and you enter a buy, then it starts going into profit and you think, wow, price could go all the way up to the previous high, or it could even go past it. That could make me 2 to 3 times as much as whatever I'm risking. You have the option to hold the trades that are winning and add to them. You also have the option to close the trades that are losing and close them very soon. What this does is, if we take the fact of reality that if you just randomly enter buys and sells with 1-to-1 risk reward ratio, you're going to be right 50% of the time and wrong 50% of the time. But if you can make more when you're right versus what you lose when you're wrong, this statistically and objectively, without me even having to make any claims that are unsubstantiated, this means that you're profitable. Here's some very simple math. You take, let's say, 10 trades. You win 5 of them, and on 5 of them, you make $150. You lose the other 5 of them, but you only lose $100 on each of those trades. So 5 trades you've won, you've made $150 on each. That's $750. The other 5 trades you've lost, and you lost $500 total. 750 minus 500 equals $250. You have made $250, my friend, with a 50-50 win rate, but just making a little bit more when you're right versus when you're wrong. All of this insane smart money, ICT concept, fair value, distribution gap, Wagyu beef, bullish pennant, wedge, distribution accumulation, upwards thrust after distribution, candlestick strategies are so much nonsense because they have zero predictive power. A lot of people can't admit that. And they also can't admit that there's a lot of subjectivity involved. How are you going to define a double top? You can define a double top as a million different things on the chart. I could go to any chart right now. It's just random bars going up and down, and I can say, look, that's a double top. And someone will say, why are you buying at resistance? And you're like, well, I don't see that as a resistance. And they're like, well, I think it's a resistance, and that's a double top, and it just retested, and there's all this subjectivity involved. This is why I'm saying it's better to not even play that game. It's better to just keep things simple and control risk. then you don't have to worry about that. The next portion we come into, I'm going to retouch on it again. It's good to add to your winning trades, and it's good to close your losing trades early. This is like going to the horse races, betting $100 on 2 different horses, and one of them starts to get really close to the finish line. That horse is like 2 seconds ahead of the other horses, and that horse looks like it's going to be the horse that wins the race, right? It gets about halfway through, 3/4 of the way through the racetrack, and it's approaching the finish line, and you see, hey, that horse is going to lose. I'm sorry, that horse is going to win. What if you could bet more on that winning horse at that time? Say on the 2 horses, you bet $100 on each. This one looks like it's going to lose. Imagine if at that moment you could say, you know what? I'm just going to remove my bet from this losing horse. And instead of losing the whole $100, I'm going to lose $75 on that. And then on top of that losing horse, I'm not going to bet more on it for one. In fact, I'm just going to like call off my bet. If you could do something like that, you can't. But let's just say for the sake of trading, you can in trading. You call off your bet, you lose 75 instead of 100. But then on your winning horse, instead of $100 that you bet on it, so $100 if you're wrong, but you make $100 if you're right, you can bet more on that winning horse in trading per se. If a trade's going towards the profit target, you can bet $100 extra. So now if that horse wins, not only do you not lose, but you've actually made your original $100 plus an extra $100 because you've added to that winning horse. Trading works the same way. Picture price like a horse race, right? You enter here. If it starts going sideways or starts going against you, you have a losing horse, my friend. You should kill the horse. Maybe not kill the horse, but maybe not bet on that horse, and maybe just withdraw your bet in the form of closing the trade and taking a small loss. If you have a trade that is winning and it's going and it's getting really close to the profit target and the upwards move, the trend continuation is playing out, it's doing exactly what you thought it would do. Why not add to that winning horse? If it looks more likely to play out and go to the final profit target because price action is showing you evidence that that's actually happening, why not add to it? Here's a very simple way you can do it. We can do it in TradingView literally right now. Let's pick something random. We'll go to NZD USD. Okay. So we're going to be real simple, right? We're going to just do simple stuff. Buy at support, sell at resistance, take trend trades, things like that. I'm going to buy at one standard lot right here. So price starts going to profit. I think it's more likely to continue to the next high, so I'm going to buy again. Price has got to the next resistance zone, so I'll close there. I also think price might bounce here at this resistance zone, so let me enter a sell. It looks like it's going to work and go to the next support, so I'm going to add to the sell. So now it's going against me, so I'm going to close this. This happened too quick for me to close early, so I couldn't close right there. So I would have probably closed it like somewhere way before this. But let's just say you really screwed it up. You take the loss. Now you're down $250. I'm going to buy here, thinking that it's just breaking and retesting this zone and continuing up. It's going into profit. I'm going to add again, and I'm going to probably take profit somewhere close to those highs. So it didn't work, so I'm going to close that there. And if it bounces here at this support, I'm just going to simply buy again. So it's starting to bounce. I'm going to buy. If it continues up into more profit, I'm going to add. It's at support. Still trying to bounce. Still at support. And it broke the support, so now I'm going to close here. So I've had a losing streak of 3 trades, and let's watch. I think it's going to now bounce at this zone, so I'm going to enter a sell there. It's going further down. I also think it's going to break this support here, so I'm going to add if it breaks. So I've had 3 positions now. I'm going to really let it make a nice lower low here, so that way we can really profit from the move down. It's now breaking and retesting this zone, so if it bounces here, I'm going to add again. I'm going to add heavy again right here since it's bouncing. And it breaks up above. Makes a lower high along these little lower highs right here. A lower low is what I'm going to wait for, somewhere down here. All right, so it looks like the trend played out. There was this big spike right here. However, with the whole context of like the downtrend and everything just moving down over time, regardless of which time frame you looked at, all of this right here insinuates the direction is likely to be down, as well as the resistance zone there and all this stuff. And guess what? You're gonna look at all this and you're gonna think, well, there's so many dynamics, Nick, and I'll flatten it. By the way, this ended up being a little bit of a profit after all of that. After a 3-trade losing streak and then finally getting like one trade that wins, it was profitable. Now, a lot of people are going to look at that and they're going to say, Nick, all of the decisions you just made there, why did you make that specific thing? Why did you hold there? Why did you add there? Why did you start a position there? Why did you choose to add 2 positions whenever you added instead of just 1 like you were doing before? All of this is super, super subjective, and it simply comes with experience. The cool thing is once you get experience, after you keep things simple, you control risk, you add to your winning trades and then close your losing trades early. You use context, you use everything to like make the decisions like, okay, it's still in a downtrend. Does it make sense to close here? No, it doesn't. It's still in a downtrend. It hasn't broken the highs. It's at a resistance zone. In this case, I think it's better to hold it. In this case, I think it's better to not add. In this case, I think it's better to add. In this case, I think it's better to close it early before the final profit target because price is going sideways and it doesn't look like it's going. You make all of these decisions after getting enough experience to justify the use of that intuition in your skill set of trading. It is not black and white, and it's never going to be black and white. And if you want to keep believing it's black and white, you're free. You can be my guest to be delusional for the rest of your life, clinging to this hope that all these trading gurus you see online teaching you these strategies of buying the London breakout with the 1-to-5 risk reward ratio, or using some ICT smart money shit to try to predict which way the chart is going to go more than half the time. I don't, you do whatever you want. I'm just saying, if you win half the time and you lose half the time, but you make a little bit more when you're right versus what you lose when you're wrong, you can do this profitably. And I've shown you that with mathematics. This is not even my opinion. This is mathematics. This is 50% win rate, but you make more on winners versus you lose on losers. That is a formula for profitability. And that is not my opinion. That is an objective fact that if those metrics are in place, that is a profitable trading approach. So I'm not making any claims that are false here or misleading. I'm just saying that is the objective truth. You go about actually implementing this by holding a few core belief systems, which is that you don't know which way it's going to go. It's going to go up or down. So you accept it's going to be 50-50. You keep things really simple. You control risk. It doesn't even matter what your reason for entering the damn trade is. It can be something as simple as like, I just think it's going to go down. And someone's like, Carlos, why do you think that, man? And you're like, I don't know. I kind of looks like a downtrend. It's pulled back a little bit. I'm going to start a sell position here. And if it starts going into profit, I'm going to add to it. And if it goes up against me to like right here, for example, like just somewhere like right, I'm going to have a stop loss, or I'm going to close it at a loss, or I'm going to have an alert there and I'm going to see if it bounces. If it starts to bounce, then I'll stay in. But if it breaks above and it doesn't bounce, I'll just close there, right? It can be that nuanced and that subtle. And all you have to do is just practice and get experience and do this over and over and over and over and over. You can use a lot of tools like TradingView and the replay feature to do this. However, I think the best way to do it is to just start a demo account. Don't have any trading rules. Just go to the charts and literally do whatever you want and just watch what happens. Learn through the experience. If you'd like to learn and get even more experience in a more quick way and see how I personally do things, you can follow my free Telegram channel. It's the first link in the description. Once you're on my website, click the free Telegram channel option. You can go and join it literally in the next 15 seconds. You can be in there. Probably the next 10 seconds if you do it right now. Hope you enjoyed this video. If you liked this video, you're free to do whatever you want. I'll see you in the next one. Hope you have a good day. See ya.